Hi, I'm Jimmy. In this video, I'm going to walk through a quick review of where we believe the US economy stands. We're going to use some varying economic indicators to see if we think a recession is coming and therefore a meaningful pullback in the stock market, or is the economy getting stronger and we think the stock market will move higher. So how about we start with the S&P 500 so we can see what the market in general has been up to. This is a one-year chart of the S&P 500, and I'm sure we all remember the market pullback at the end of 2018. Since then, the market's had a pretty decent recovery. But if we switch to a 5-year chart, we can see that compared to the first 3 years, the past 2 years haven't done all that much. So now that we know what's happened to the stock market, let's shift our attention to the economy and ultimately to see if we can try to find the key drivers to the stock market. So there are some leading economic indicators that generally do a good job of predicting where the economy is going to go. One leading economic indicator is housing. This right here, this is a chart of housing starts. Basically, this looks at how many housing units are being built. Oftentimes, strong housing demand can lead to a robust economy as more houses get built, more people are employed, more people buy furniture, appliances, things like that. In general, the theory is that the overall economy will be helped by a strong housing market. Okay, so housing starts look like it pulled back recently, which implies a potential weakness in the housing market, which could be a bad thing for the economy. Now, this may also be associated with the fact that interest rates went up a little bit, which would in theory lead to higher mortgages, but we'll have to see when we tie all this together. So let's keep pressing on. Another good leading economic indicator is to look at manufacturing. This is the ISM Manufacturing Pmi Index. ISM is the Institute for Supply Management. And this looks at manufacturing in the US, and it looks like manufacturing did in fact pull back from 2018, which isn't a great thing for the economy. But it wasn't a huge pullback, and this index tends to be fairly volatile. So we probably shouldn't react to such a brief pullback. I often think it's important to look at a broader trend than a single pullback or a single month or a single period of time. Okay, so we got 2 question marks as far as where the economy is going right now. It doesn't look too great to this point. But it's not all bad news. This is a chart of unemployment, and I pulled down as much data as I could find, and you'll see that this chart goes all the way back to the 1940s. And I did this because I think it's important for us to realize that unemployment is at one of the lowest levels in history, which is generally a good sign for the economy. Along those same lines, this is a chart of consumer confidence. And as we can see, consumer confidence is climbing higher, which is generally a good sign for the economy. Now, what consumer confidence measures is it measures, in theory, how confident people are about the economy for the near future. So the fact that unemployment is low and consumer confidence is high makes a lot of sense and gives us some positive indications about the economy in general. Okay, so now we have a housing indicator that pulled back. We have manufacturing that pulled back in the past few months, and those are some red flags. But then we have unemployment that's very low, especially compared to historical levels, and consumer confidence that's relatively high. Those are good signs. So what do we think about the overall state of the economy? Well, earlier I showed a chart on housing starts, and that chart showed weakness. But there's another indicator that's believed to be a leading indicator to housing, and that's called pending home sales. So the pending home sales indicator was created by the National Association of Realtors. And basically what it does is it tracks the amount of houses that are currently under contract. So basically, it means that somebody agrees to buy a house, they sign a contract, but the house hasn't closed yet. The deal is not finalized yet. They say it takes about 2 months, just short of 2 months on average, to close a contract. So as we could see, the pending home sales number jumped in the last reported number. That was at the end of January. And if home sales starts climbing, well, in theory, what's likely to happen is that the housing market in general is going to improve, which should lead to an improved housing starts number. Now, if that were the case, well, then 3 out of the 4 indicators that we looked at would have showed signs of strength, and that would be a good thing for the economy and ultimately for the stock market. And this leads me to where I believe the economy is right now. Now, personally, I believe that we're at an inflection point. Out of the indicators that I've shown in this video, well, it looks like there's indicators showing positive signs and there's some indicators showing signs of weakness. Now, these aren't the only indicators I've looked at. I did a much more thorough analysis. These were just the most interesting ones, but broadly speaking, this was the consensus. Signs of strength, signs of weakness. But ultimately, this brings us to where I think the portfolio should be. And I believe that our portfolios, for me, should remain fully invested at this point. Although there are signs of weakness, I believe that there are too many signs of strength to be sitting on the sidelines. But clearly there are warning signs, and we don't want to completely ignore those. Another indicator that deserves some attention, and got a lot of attention a few months ago, is the yield curve. And this is a chart of the current yield curve. And basically what we're afraid of with the yield curve is we're afraid of it inverting, which is basically pointing downwards. Now, if we were to add the way it looked 6 months ago, well, we can see that not too much has changed with the yield curve. It's still pointing higher, which is a good thing, but it's still fairly flat. So I think it's something that we want to keep in the back of our minds, and we want to continue to watch it. This is an example of something else that it's not a terribly interesting piece to the story, but I want to bring it out because it did get a lot of attention and it deserves attention. So for me, it doesn't seem that the yield curve is significantly better or worse right now than it was. So what do we do with our portfolios? Well, for me, it makes sense to remain fully invested, but also perhaps take a defensive stance. Perhaps we shift some of our more aggressive holdings to some more defensive industries. Something like utilities might make sense. This is a chart of utilities going back about a year or so. And as we could see, it's had a pretty good run. Now, this makes sense because if you think about 2018, which was a negative year for the stock market, well, utilities is a defensive sector, so that would do well. If the market was roaring right now, well, utilities would most likely lag. That being said, when it comes to the economy in general and how we stay fully invested or where we invest more money, I think it makes sense to repeat this type of analysis in general. If I was sitting on the sidelines right now, I would come into the market, but I'd come in a defensive nature. That being said, do you think that we should do this type of analysis more frequently? Perhaps on a quarterly basis, I could create this type of video, look at different indicators and bring out what I think is most useful that to help us guide us with the overall economy. Let me know if you think that makes sense in the comments below. Also, I'm curious, are you fully invested? Do you plan on remaining fully invested? Are you shifting it all from a more aggressive portfolio to a defensive portfolio? Or are you staying steady as she goes? Don't worry about it, just stay exactly how you are. Let me know what you think in the comments below. If you haven't done so already, hit the subscribe button. Thank you for sticking with me all the way to the end of the video, and I'll see you in the next video. Thanks.